heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York. Ed Ludlow, he's on assignment today. This is Bloomberg Technology. Coming up, China-US tech tensions. They build as Yellen heads to Beijing for meetings. We discuss China's move to restrict metals needed for everything from EVs to semiconductors. We'll discuss the significance of those curbs. Plus, AI video startup Runway raised an additional $140 million from Google, Nvidia, and other investors. We have an exclusive interview with the CEO. And a new law comes into effect today targeting AI and hiring right here in New York City. We're bringing the details as NYC seeks to curb bias in the world of recruiting. But first, let's check in on those markets. On a day where we talk about geopolitics of US and China, we also talk about economic impact of a slowing services growth that we're seeing. The lackluster numbers coming over from China, and they're really downbeat, therefore, on the rest of the world's trading. Europe was lower, Asia was lower. We're seeing the all-country world index up by 0.4%. In fact, the Nasdaq 100 had been outperforming. It still is, but it's still now in the red now, off by about 0.1%, and managed to keep its head above water, but now it dips a little bit lower as we also drag down some of the big tech names, even though Meta fights a good fight. We're looking at Golden Dragon China Index, of course, the Nasdaq Golden Dragon. This is how you have the Chinese names traded here in the US. I'm looking at Tencent, Baidu, all on the downside, and it particularly is showing some of the worries about the weakness in the Chinese economy. Moving on, and let's have a look at some of the individual movers. With Ed out, I'll crack into the micro. Meta Platforms really outperforming in terms of trying to pull up the rest of the tech indices today. Why? Well, we get their Threads, the new Twitter take on, it would seem, from Meta. That's going to be launching tomorrow. We can discuss that later in the show. Rivian also getting a bid, up 1.4% as they start to be exporting their trucks over to Europe. Of course, key player when it comes to Amazon as well. We'll be going to Ed Ludlow a little bit later as he's got a great interview coming up. And I'm looking at the chip sector because this is all to do with the geopolitics. This is all to do with the worries that those key metals, those rare earths that China is now limiting to the US is going to have an impact on the likes of Intel in particular on the downside today. AMD, even though it got raised to a buy by some analysts out there today, it also on the downside. So we're off by 1.6% if you're looking at the overall stock index focused on chips. Let's talk about US-China a little bit more. US Treasury Secretary Janet Yellen is visiting China this week, trying to find some areas of common economic ground and opening communication channels. But it's just days after China imposed those restrictions on exporting two key metals. They're crucial to technology industries. And of course, those are reports from the Wall Street Journal are swirling that the US administration might limit China's access to cloud computing services from US giants. Pleased to say, to break it all down, Bloomberg's Kaylee Lyons joins us from Washington. And what an important time for Janet Yellen to be going over, but feels as though tensions are just dialed up a notch in the last few days.
Yeah, an important time, sure, Caroline, but also a very difficult one. Of course, this is a trip that Treasury Secretary Yellen has been attempting to make for some time. She's been alluding to this for months, that she would like to go visit Beijing, open these lines of communication, and meet her new counterpart, the new Chinese Vice Premier He Lifeng. It is finally happening. She leaves today. She'll arrive tomorrow. She's there for a few days of meetings in Beijing through July 9th. And the bar does seem to be set pretty low. As I said, Janet Yellen has said any trip she makes mostly will be about introductions, getting to know each other, and a Treasury official has said they don't expect any major breakthroughs. But the point is that she is going to go be there in person. This is something the administration is trying to do, reestablish relations in a better way with Beijing. We obviously saw last month Secretary of State Antony Blinken making his own trip there. But in the lead up to it, the fact that we are seeing this kind of tit for tat action, the U.S., of course, the Biden administration looking at potentially by the end of this month, an executive order on outbound U.S. investment into China, the cloud computing services related to that Wall Street Journal report you mentioned, Caroline. And then on the China end, the restriction of these two key, although they are minor, metals in play as well.
All of this has an economic impact. Is it one that Treasury Secretary Yellen is worried about ultimately? Is she feeling that her role is actually more even global than that? Because in many ways she's looking to China to reduce some of the debt burdens on other countries, not just the relationship between China and the US.
Yeah, that's absolutely true. I mean, we are talking about the two largest economies in the world here. So whatever happens with China's economy by default is going to also have an impact on the U.S. economy. And she has previously characterized back in April her strategy when it comes to China about wanting to protect national security interests while not necessarily trying to impact China economically, pushing back against the idea of decoupling. But you're right to point out, Caroline, issues that Janet Yellen is likely to raise in this meeting include things like China's role in relieving the debt burden of some countries for which it is a very large creditor. Things like trade and the global economy also likely to come up. And on the subject of trade, that is really where it comes down to China's action on these two metals, gallium and germanium, which are used in everything from EVs to semiconductors to space satellites. That is a trade issue as well. Restricting those exports, certainly a role played in the ratcheting up of tensions between China and its trading partners. All of those things could have issues on the cost of goods, on the economy, implications for it, and as a result, likely things that the Treasury Secretary is going to concern herself with.
Katie Lyons, great roundup. Thank you so much. I know you'll be following it throughout the day. We thank you. Meanwhile, now let's continue the conversation. Ben Harberg is with us. He's the managing partner at MSA Capital. It's actually a global investment firm that oversees about $2 billion in assets under management. But key is its mission to bridge the best of China and the rest of the world. Key, Ben, is your expertise for us because you invest in Beijing. You live in Beijing most of the time, and you're using money raised perhaps in the US to allocate to China. How difficult has that become?
Harder and harder. And we saw this coming, so we diversified our capital base 5-6 years ago. But today, China is nearly uninvestable for U.S. private capital.
Do you think that is going to ratchet up a level? Do you think any of these sorts of missions coming from Janet Yellen and Blinken going to China could dial that back a little bit? Or more realistically, do we worry about China's giants' access to U.S. IPOs and the like?
I think from a capital markets perspective, the U.S. is still open, although it's closed for everyone right now. I do think, though, it'll be harder and harder to raise U.S. capital, particularly capital that has institutional ties to pensions, endowments that have some kind of a federal funding basis, so DARPA grant recipients or others, because there's this fear that that funding will be cut by some of these executive actions that you foreshadowed.
I mean, goodness, we just saw one company that's building putting manufacturing in Kentucky, for example, no longer getting a grant from the Biden administration because of their links to China. What, therefore, does U.S. capital miss out on by not being able to access China?
You miss out on what will soon be the world's largest market and is already in many key verticals the world's largest market. There's an opening void and a lack of comprehension around that market. So it's really an arbitrage opportunity today to access growth that is being shied away from for non-financial reasons. So accessing that China alpha in a way that is politically safe is still very much a growth story for the coming decades.
What's interesting is, of course, all of this has been, in many ways, trying to be articulated that this is about nearshoring or indeed making sure that your supply chain has resilience, as we saw it so break down during COVID. When I bring up Microvast, which is now no longer able to do a battery plant in Kentucky because of its relationship with China, when you see the moves by China to limit certain metals to the US, how much of a problem is that going to be? Or can the US, like it's trying to do with chips, start to ensure that they can also access rare earths quickly so the supply chain isn't disrupted for the next 4 years or so?
Certainly both sides are trying to wean themselves off of dependence on the other and become more self-sufficient. The U.S. on the core inputs and rare earths and other commodities, and China on the chips itself. I think that these bans on gallium and germanium are just the first volley of Chinese future restrictions in this tick for tat between the two countries. And China has a significant share of the deposits of these rare earths across many different use cases, and also has the manufacturing, the extraction, all these types of infrastructure investments that will take years for the U.S. to ramp up and actually execute upon in order to wean itself off of Chinese dependence.
What everyone's been very much animated about of late is AI, generative AI, the focus back here in the US on the excellence that's being developed, but also what's happening when you're there in Beijing. What are you seeing in terms of generative AI and AI capabilities over there?
It's a huge investment theme. It's attracted most of the capital invested over the first couple quarters of this year. It's still very hard to determine who's going to be the winner. Largely people that have a proven track record and existing success in other businesses. For instance, the founder of Meituan were able to attract hundreds of millions of dollars at billions of dollars of valuations. And it still scares me quite a bit because it's unclear whether or not they really have the execution capabilities and the market fit in order to execute upon them. So still very much TBD.
Where is the AI expertise from your perspective in China?
Well, China still obviously produces the world's largest crop of STEM graduates. It has a very deep base of talent to draw upon and the largest homogenous data set to work with. And so there's still huge opportunities to take that and apply it to retail, financial services, education, and all forms of other enterprise outputs.
When you're saying it's harder and harder to raise US capital to allocate in China, who is wanting? Who's going to take the place of that US capital?
So we're seeing a huge geopolitical shift of emphasis from particularly markets like Southeast Asia and the Middle East towards China, markets that were under-allocated to China historically and are now opening with arms wide open for Chinese businesses as well as capital flows cross-border. We've seen actually a push-off of U.S. economic and political interest, particularly in the Middle East, as they work to embrace China.
What about your role, therefore? You're sticking there, you're remaining committed to the assets that you allocate. How do you see your movement back and forth? I mean, you're here in New York for the next month or so.
I'm an American by birth, but certainly I believe that a world is better where these two markets work together, and particularly as it pertains to climate, disease, all kinds of other major phenomena forcing themselves on our world. We have to work together. But there's an opportunity now for those of us that do deeply understand China and also have deep relationships here in the U.S. in the political and economic field to help investors in the United States navigate all of these geopolitical risks in China and still access that high alpha.
Great to have some time with you. Thank you for what is a very complex situation, just shining a light a little bit more expertly for us. Ben Harberg, of course, is managing partner at MSA Capital. We thank him. Meanwhile, coming up, another alternative to Twitter. It's emerging, but this time it's from Meta. It won't be available just anywhere, though. We'll have more on Threads, the text-based conversation app, next. And look, let's return to some of the winners, perhaps, in the global tit for tat, particularly when it comes to those two key rare earths that, of course, China restricting the export of specialty materials, germanium, gallium. Two metals that are crucial, we said, to chips, to telecoms, to EV industries. Well, they are actually produced here in the US, just ever so slightly. A Las Vegas-based company, MP Materials, is one of them. It's getting a boost on the back of it. This is Bloomberg. Let's talk about it. Meta's highly anticipated Threads app is expected to launch tomorrow. And this comes amid rampant critiques of Twitter's user experience, of course, since Elon Musk took over. Joining us from San Francisco, Sarah Fryer, Bloomberg News big tech team leader, also social media reporter Aisha Counts. Thank you both so much for joining me. Sarah, just start with how Threads is going to evolve. This is Instagram related, right? And so immediately it become enormous. The scale could be phenomenal.
That's really what's so exciting about this launch for a lot of people who have been disillusioned with the updates at Twitter as of late. I mean, they have tried platforms like Mastodon, like Blue Sky, like Post, you name it. There's so many Twitter competitors out there that haven't quite gotten the network that they need to truly be a threat to Twitter. And here is Meta, which has upwards of 3 billion users on its products around the world, and Instagram, which has a following structure similar to Twitter, where unlike Facebook, where you're friends with the people who are friends with you, on Instagram, you can follow people who are interesting. That is the same as the Twitter model. So it makes sense for them to say, we're having a Twitter copycat app over here, and you can choose to follow the same people you follow on Instagram, connect with those same people, and keep your handle, keep your verification. That means it's a very powerful head start for this app Threads if people choose to use it. And I do think it could be a major threat to Twitter.
Let's ask you, Aisha, I mean, we know Twitter's hard to sometimes elicit viewpoint, but since Linda Yaccarino's come in and taken over the CEO role, they have been much more communicative. Are you finding that they're worried, people you speak to, do they see it as a big threat?
I mean, like Sarah said, I think it is a huge threat, right? You have the alternatives, as she mentioned, Post, Mastodon, Blue Sky, that just did not take off in the way that people thought they would. People went to those platforms, but then were not exactly enthused by maybe the user experience or not having enough people, not being able to take over their same handle. And so if Instagram can come in with Threads and do all of those things and sort of solve a lot of those problems, I could see people moving over. Twitter has had a lot of changes with the verification system and how you get blue check marks, having to pay for additional features. Over the past couple of days.
Yeah, Aisha, just dig into the limited usage, because there's been more clarification over the holiday day yesterday and over the weekends. But what are you hearing about some of the pushback against the latest moves that Twitter itself says is to ensure authenticity?
Yeah, I mean, people are not happy about the fact that you're going to be limited in the amount of tweets that you can see. And it is supposed to be a temporary measure, but the reason people go to Twitter is to be able to see tweets and to be able to see activity going on. And so when you start limiting that, that's concerning. Some people have also said maybe advertisers could be concerned about that, right? If there's less tweets, that means there's less ads that people are seeing. So it's challenging. Now, it is temporary. We don't know how long it's going to last, but there has been some pushback just on Twitter and just amongst users.
Sarah, talking of pushback, who is pushing back in the EU? We understand that Threads isn't going to be available there as soon as tomorrow if you're in the EU. Is this regulators saying, no, you can't do this? Or is this Meta saying, we are not bringing our innovation to you because of your stricter regulations?
I think that there's a little bit of both going on. I think that regulators are certainly concerned and saying, if you're going to add this new product in the EU, there are other considerations around competition, around the fact that Meta already has, all of the major social platforms. Do they really need another one? There are the concerns about the usual privacy details. I think there's just a little bit more to work out before they can launch there. I think that, given Meta's global focus, they're going to want to launch there eventually. But for now, they're going to want to establish this as a product that people want to use. And I think it's a really interesting time because across their other products, they're really moving away from text-based communication and towards short-form video. They're trying to take on TikTok, on Instagram, and Facebook right now. And so Threads may be an option not just for people who use Twitter, but for people who want to just post about their lives in a text-based way and find that those kinds of content don't do as well on Instagram and Facebook the way that they used to. So it could be an interesting, more mainstream version of Twitter.
What about the advertisers, Aisha? How much are companies looking to go towards a Meta vis-a-vis a Twitter?
Well, I think advertising is a huge opportunity for Meta with this, right? Advertisers moved off of Twitter. Advertising revenue went down significantly since Musk took over. He said some advertisers have come back, but a lot of people left for all the reasons that we just outlined, right? Some of Musk's behavior, some of the changes to the platform. Already, advertisers are going to some Twitter alternatives. So it's a huge risk, I think, for Twitter if Meta can build a competitor and take away some of the issues that Twitter had with content moderation and so on and so forth. However, Twitter does have Linda Yaccarino, and she has a lot of industry experience. She has relationships. Twitter has made some changes recently. They've been talking more about brand safety, so they might be able to keep advertisers. I don't know. We'll see how it plays out.
We'll have to wait with that cage match occurs as well. But for now, the figurative cage match is about to ensue as soon as tomorrow. Sarah Fryer, Aisha Counts, thank you both so much for breaking that down. Meanwhile, coming up, Rivian started delivering the electric vans it makes for Amazon to Europe and its first commercial shipments outside of the US. More on that next. This is Bloomberg. Time now for Talking Tech. First up, Meta CEO Mark Zuckerberg is facing scrutiny in China. It's after a state-backed social media account published a scathing editorial on the Facebook co-founder. Now, the first reported by Hong Kong newspaper that the editorial emerged after the Wall Street Journal reported that Meta was in talks with Tencent Holdings about selling its Quest VR headset in China. Zuckerberg has openly criticized Chinese censorship. Meta and Tencent didn't respond to requests for comment. Meanwhile, Spotify's CEO has raised over $65 million in venture capital to expand his medical startup. It's called Nico Health. Atomico, Lakestar, General Catalyst join in the investment as some of the company's biggest backers. The startup provides full body scans for skin and heart conditions over there in Sweden. Plus, Rivian, well, it started delivering the electric vans it makes for Amazon to Europe. its first commercial shipments outside of the United States. Amazon will roll out more than 300 delivery vans in the coming weeks to German cities, including Munich, Berlin, and Dusseldorf. Joining us to just talk through that a little bit more is Bloomberg News' Craig Trudell. So how big a deal is this for Rivian? Because the shareholders like it.
Yeah, it's absolutely a big deal for Rivian. I think anytime there can be a sort of reminder of the ties to Amazon and the role that Amazon plays as a big customer is a good thing for Rivian. Not that folks who know this company well and have been following it closely will forget that. But I do think this is a company that, if we take a sort of step back and think about, what's happened since their blockbuster IPO in late 2021, they've had a heck of a time getting production up and rolling. And so this is an indication that, yet another indication that, production is kind of being smoothed out. We saw that a little bit earlier this week with the production numbers that they reported for the second quarter, and the fact that they're able to now, not only boost deliveries locally, but start some exporting is a positive sign for production going forward.
And positive coming from the analysts as well. Needham analyst Chris Pierce lifting the price target after those production numbers. D.A. Davidson, the analyst there, really upgrading the stock to neutral from an underperform. And therein lies the fact that it has been underperforming, right? There has been a lot more worries and concerns. Just remind us of what's sort of been the chokehold on the production side of things.
I mean, they were suffering from, the issues that the broader industry has for a couple of years now, right, of just supply chain duress and the chip shortage. And just when we think that we're through that, now we have, these concerns about these metals in China and whether or not, that will be the latest, thing to slow down supply of semiconductors. I think one of the things that this story speaks to, though, this idea of starting to ship vans to Europe is just the need for electrification in this commercial vehicle space and this role that Rivian could play in that. When you think about sort of the biggest bang for your buck in electrifying things that are on the road, if you can electrify these vans that do a ton of miles a day, that are doing increasingly these last mile deliveries because of the rise of online shopping and deliveries in city centers, we know for a fact that cities want more of these on the roads. Incumbent manufacturers are having a hard time meeting demand. Startups are having a hard time meeting demand. So if Rivian can get cranking on these vans, we do know that there's a lot of interest in these if they can, sort of follow through on this big order from Amazon for over the next half decade or so.
100,000 big order for the vans over the next decade.
It's a lot of vans.
It's a lot of vans. Bloomberg's Craig Trudell, thank you so much for joining us. And in fact, we've got so much more in this story for you. We've got a live interview, the CEO of Rivian. That's coming at 4:30 p.m. Eastern Time. None other than my very good friend, Ed Ludlow. Meanwhile, coming up, New York City taking steps to regulate artificial intelligence when it comes to your hiring. We'll get the details next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Ed Ludlow, he's currently on assignment. Let's check in on these markets today, though, because we're pretty muted after the day of celebrations for July 4th. We're just off about 0.1% on the NASDAQ, and actually tech is outperforming the rest of the market. The rest of the market nervous about Chinese economy, the growth story, lackluster there when you looked at the services number. Also, then, the NASDAQ 100 does manage to outperform in terms of the big names. We'll get into the individual movers as the support there. But look at the 10-year yield, once again moving higher by 6 basis points. Remember, we get those FOMC minutes from the previous rate decision where they stood pat. They did nothing for the first time in 10 rate hikes. So we're interesting to see if there's any steer, any color as to just how divided the FOMC is in terms of tackling inflation here in the United States. Let's move on and have a look at some of the individual movers, because we do have companies on the move. Meta Platforms, as I say, really the star performer today, up more than 3% as we anticipate that unveiling of Threads as soon as tomorrow. Of course, their Twitter take on. Intel off by 2%. And in fact, most of the chip stocks are down today as we worry about the geopolitical risk coming from China, the fact that they are limiting the materials, the rare earths in particular, that go into semiconductors, EVs, you name it, those two key materials that are going to be, well, even harder to get a hold of. Intel on the downside. And Pegasystems, just want to show off this particular software company. And interestingly, up 14%. Of course, a small company, but really getting a rating upgrade, as some analysts out there really feel that some of the legal headwinds are not something to be as agitated about as was previous. Up 14%. Meanwhile, let's talk a little bit about software and hiring in particular here in New York City. It's taking steps, in fact, the city is, to regulate artificial intelligence when it comes to hiring. Today, a new law comes into effect that requires companies using AI software in recruiting to notify candidates that an automated system is being used. It's also requiring companies to have independent auditors check the technology annually for bias. Let's talk about all of that with George Wycamp of Bloomberg Law. And George, why is there potentially the threat of bias within these AI systems?
So yeah, AI is used in all kinds of hiring mechanisms around the country, ranging from resume reviews to evaluating video interviews. It's all over the place. A 2022 survey from the Society of Human Resource Management showed that nearly 1 in 4 organizations use AI in some HR capacity. So it's really all over. There's a lot of concerns, and with that, there's a lot of concerns among lawmakers and advocates alike that these technologies, which are relatively novel, they haven't been in effect for that long, rely on data that bakes in prejudice because, a lot of these systems, like a lot of other things, are being trained on historical data. And this data is imperfect and could have a discriminatory bent.
Okay, so talk us through the new requirements. First of their kind coming from New York. What would a company have to do? How would they go about disclosing?
Yeah, so the law on its face requires all New York City employees to independently audit their systems. That means they have to get an independent firm to audit. It has to be done once a year, and they need to publicly disclose the results on their employment website. And the law also requires that these employers inform job candidates that they are using AI prior to their use in any kind of hiring mechanism. The law does not currently have any private right of action, meaning you cannot file an individual suit against an organization if they don't comply. But if an employer is to be found in violation of the law, they will incur a $500 fine on the first offense and a $1,500 fine on each subsequent offense.
And some companies had actually fought back against it, or at least lobbied against this new law, and it had been tweaked around the edges, George. But I'm interested about now it's officially enforceable. Does this become de rigueur across the rest of the states? What do we see in other cities? What do you think comes next?
Yeah, so this is a first-in-the-nation law, and it's likely to be followed. There's been growing pressure in recent years for jurisdictions to regulate AI. It's been a high priority for the Equal Employment Opportunity Commission, which is the agency that's in charge of enforcing Title VII of the Civil Rights Act of 1964. Some other states have laws on the books, Illinois and Maryland in particular. They have laws on the books that regulate AI in some extent for video interviews. But this is likely to be followed. And while right now this just applies to employers within New York City, it's something all employers need to be thinking about right now as they use artificial intelligence in a hiring capacity.
Great roundup, George Wycamp. Thank you so much at Bloomberg Law. I have a feeling we might be coming back to you at some stage soon. Meanwhile, let's take a deep dive into so-called artificial intelligence whisperers. Look, you can earn 6-figure salaries and you don't even need any programming experience. Bloomberg's Conrad Quilty Harper met one of these prompt engineers, as they're known, to find just how to coax the best out of those large language models.
Albert Phelps is a full-time prompt engineer, or as he describes it, an AI whisperer. I sat down with him to understand what's behind this increasingly coveted role that can pay up to 6 figures.
So we're saying, you're a highly creative and talented journalist working for Bloomberg News.
Thank you.
And create an introduction to an article on prompt engineering in the House Bloomberg style.
It's not got the kind of clean prose of Bloomberg, but it's a bit flowery, I'd say. With the rise of large language models like GPT-3 and GPT-4, demand for a new kind of AI job is also growing. Prompt engineers spend their day coaxing the AI to produce better results and help companies train their workforce to harness the tools. The role can pay as much as $335,000 a year, and for many it doesn't even require a degree in computer engineering or advanced coding skills. I'd love to see how you spend your day. Could you maybe build me a demo of a Bloomberg editor, let's say?
Absolutely, let's go and do that.
Okay. OpenAI's consumer-facing tool ChatGPT is pre-prompted. It's set up to be a helpful assistant. To be a professional prompt engineer, you have to get into the guts of the large language model. That means changing the default prompt. This is the OpenAI playground, right?
Yeah.
So this is a more advanced, more neutral, more powerful, customizable version of what you see when you load up ChatGPT.
Yeah, exactly. What we're going to look to do is help you write some interesting content around different prompt engineering techniques.
So this is, you're making a sort of helpful assistant for me to write a story about prompt engineering as a Bloomberg journalist.
Yes, exactly, yeah.
A seemingly semi-mystifying technique, prompt engineering is an action-packed interface between human creativity and AI's data crunching power. Yeah, it's making me a bit sick.
Yeah, I think so. I think there's more work that we need to do.
There are a few tips and tricks that Albert uses to improve his results. Change the temperature or the randomness of the output, tell it to take things step by step, and feed it a previously written article as an example. After 30 minutes of work, we didn't quite manage to replace my editor with AI, but the responses did get more useful as Albert added more context and instructions.
One thing that I probably haven't done a lot of here is actually treating this as a dialogue is actually a really useful way often of getting better results.
Okay, we're getting somewhere now. There's a germ of an idea that's interesting. Albert says prompt engineering has turned the English language into a programming language. He's had no technical education or programming experience. In fact, he studied history at university before starting his career as a consultant. He says his non-scientific background makes him more, not less qualified to wrangle AI tools. When it comes to fearing this technology replacing our jobs, he's not as concerned. And when will my editor just be a ChatGPT type model that we've developed together?
I would probably think of it the other way around. I think we as humans actually might become more like the editor. We'll outline what we want the model to do, we'll give it some test cases, we'll give it some examples, and then we'll be the ones essentially doing that editing.
Liberal arts back on the rise. Prompt engineer Albert Phelps there, speaking with Bloomberg's Conrad Quilty-Harper. Coming up, Runway securing an additional $140 million in funding from some big names in the world of tech. I'm going to sit down for an exclusive conversation with the CEO next. This is Bloomberg. AI startup Runway, whose software can create a short video from just a few typed words, has raised $141 million in funding from the likes of Google, Nvidia, Salesforce, and other investors. Joining us now, I'm pleased to say, is the CEO of Runway, Chris Valenzuela. Chris, congratulations. $141 million is actually an extension of your Series C. Was this inbound interest coming from these big players?
Yeah, thank you for having me. We've been working on Runway for now 5 years or so, and so very thrilled and excited to be partnering with the likes of Google, Nvidia, and Salesforce on this new round that extends our kind of like bandwidth and capacity to continue innovating on core research that we've been working on since the release of Gen 1 and Gen 2, which are video generation models. There's still a long way to go, but we're excited about taking this new funding to improve and scale our research efforts.
And it's interesting, isn't it, that previously been raising money from the big VC names, but now it seems like it's strategic investors coming in. How do you think their interest was piqued and wanting to come in and do this extension?
Sure. I mean, there are different parts of I would say, the development of these models. And you can think about it as two phases. The first phase is building the baseline foundational models, and that takes a lot of time and kind of like work and engineering kind of efforts. The second part is kind of, I would say, the phase that we're in right now, which is getting these models out to more people, to more customers, to most enterprises. And that being able to work with companies like Google, Nvidia, and Salesforce really like speeds up that and allows us to innovate at the speed that we need to innovate. We're entering that phase of development that requires a different set of like attitudes and I would say research kind of like mentalities. And so still early, but excited to be working with some of the best companies in the world.
And of course, Chris, I mean, you haven't disclosed your valuation, but we understand it's thereabouts of $1.5 billion. Just talk to us about the costs from your side. You're going to be using this to, of course, beef up team, to keep on creating, innovating, but the compute power must be massive. Is that something where a Google comes in?
I think there are two parts, again, of the stage of where we are with these generative models. And video models and image models tend to work very different with the language models that perhaps are the ones that are more discussed nowadays. For video models and for image models, there's a scale component on the infrastructure side of things, and making sure that models are fast and reliable and you can train large video models it's a complex task. So we're putting a lot of resources on making that happen with state-of-the-art technology and research and compute. But on the other side, there's so much on the infrastructure that needs to get built that hasn't yet been built, that also requires a lot of effort and time and great people to build. We are an incredibly small team that's been really pushing the boundaries of the field for the last 4 or 5 years since we started on building these models and these technologies. And so really making sure that you can work with the best on both the research aspects and the engineering aspects, it's really important. And the researchers will go pretty much to both ends on the research and engineering side as well.
And you have been working on the infrastructure side a lot already. Chris, in layman's terms, can you tell us like some of the issues there, what architecture you need to build to scale at the rate you want to?
For sure, that's a great question. So if you think about it really on Gen 1 and Gen 2, which are two of the video generation models we just released, and I say just because it's only been like 4 or 5 weeks since we did it, there's so much work that goes into making these models do what they're about to do, which is generate video, right? You're generating video. If you stop for a minute and think about it, you're generating video with words, which 5 years ago, 10 years ago, we have thought to be like impossible or very hard. Almost feels like magic these days. And so making sure that you can do that, it's in itself a very technical, difficult fit. And so research has gotten to a point where we're able to kind of like generate the videos you're seeing right now. And those are just being generated with words. But then on the other side of things, this is a very complex infrastructure that allows anyone really with a mobile phone or a desktop application or an internet connection to be able to do this. And in order to do that, you need to have an inference and a streaming service that's able to generate those frames almost on a real-time basis. Our videos take like 40 seconds to generate, which is fast, and we're making sure we can reduce that to hopefully at some point or at some time do it on a real-time basis. So everything that we need to build to make that happen hasn't been built because these models and this technology didn't exist literally a couple of months ago. And so really from the ground up, we think of ourselves as a full stack company, which we ask ourselves to be able to build everything that allows you to deploy these models to our filmmakers and studios and creative companies around the world that are already using and leveraging this technology.
I've been using and not really leveraging, but interested in it and playing around with Gen 2 today. And it's beautiful, some creations that you make, but it's interesting that sort of faces are the area that perhaps aren't that easy to provide, and also the way in which you have to have an abundance of caution. How are you thinking about some of the, still evolving regulation and the way in which that you can ensure content remains, moderated in some way, really?
First, and we take safety extremely seriously in Runway. We have a team dedicated just to make sure we have the right filters and safety policies in place. And so we're taking an obviously cautious approach here. The analogy I've been trying to, really think about and best communicate the stages of development that we're in with these models is to think about this as a new kind of camera, right? So we're putting a new kind of camera in the hands of filmmakers and artists, and there's new norms and new policies and new kind of like ways of using this technology that will have to be evolved and created as we start improving the quality of these models. Again, these are very new models, and so there's a long way to go. By taking a very, I would say, opinionated matter, making this technology safe, and really the important aspect here is controllable. Like these tools are tools for artists that are meant to augment a creative process. And so by making sure that you can use them in a safely environment, in a creative environment, for us, it's always been and would always be our priority.
Are actors right to be worried in the way that we're currently seeing?
No, I think, most of the usage of the overall thoughts around video and AI video generation comes from this idea that you're going to be able to like just type in a few words and generate a Hollywood movie. The truth is that that's far from being actually the case. These are tools that would allow you to iterate faster on your processes, on your ideas, on your projects. But in no means they're trying to replace anything. They're just augmenting those things. And so perhaps the question is like, how fast and how easier are we going to be able to shoot and do a scene with an actor in the way that perhaps we couldn't today because it's either too expensive or too time consuming these days to do it.
Chris, great talking to you. Thank you on the funding round and the growth. Chris Valenzuela, he's the Runway CEO. Meanwhile, coming up, let's talk about, content creation, but the streaming wars around them. It's heating up. Amazon feeling a bit of lagging behind the likes of Netflix. We'll have the details on that story. Speaking of which, let's just take a quick look at shares of Netflix. Opening up strong in US trading, now just fading a little bit in the midday. Goldman had upgraded the streaming service to neutral, saying management has executed its password sharing crackdown more effectively than expected. This is Bloomberg. Let's talk streaming wars and the costs involved. Amazon's CEO, Andy Jassy, is taking a hard look at how the company's Hollywood studio spends on original TV programming and kind of wondering why its shows seem to cost more than Netflix's. Bloomberg's Chris Palmieri is here to break it all down, and we know they're on a cost-cutting focus. We know the jobs that are being shedded. It's an obvious place to look, the content. Why is it ending up more expensive?
Well, they did this massive pivot. If you remember when Amazon started in video, they were going to use their sort of experience in books and find out these sort of arty shows that people, they thought their book customers might want to watch. If you remember programming like Transparent. And then they, Jeff Bezos said, I want a Game of Thrones. And they started this massive spending push. We saw the Ring of Power, the Lord of the Rings spinoff, and massive shows like Citadel, which has kind of been a disappointment from the Russo brothers this year. And so now, as you mentioned, Andy Jassy, the CEO, is taking a hard look, calling the entertainment executives to headquarters. We're asking for detailed accounts of their spending, including the big shows. It's part of an overall sweep of what Hollywood's doing, looking at spending in the streaming wars, but, you know, exacerbated by Amazon's situation.
And is there any way that they can reduce the costs without crimping on some of the wins here, or indeed the fact that they're investing because they want to keep us addicted to the broader Amazon offering, not just, of course, Amazon Prime?
Well, that's always been the argument, and why sort of Amazon's video business has been so much under the radar, because they have this ulterior motive, which is just get people subscribing to the Prime service and lock them in for shipping and all kinds of purchases. But, you know, they can't do that forever and not, you know, and face the reality, which is everybody's just been spending too much money on TV shows. It looked like the era of peak TV has finally arrived.
That's for sure, just as the economy takes a turn, of course. Chris Palmieri, thank you so much for joining us. I hope you feel a little better. Meanwhile, let's have a look at what's happening in terms of Rivian's first commercial shipment outside the US. Of course, Rivian, based upon Amazon in many ways, providing their vans, electric vans. Who other than Ed Ludlow is the expert for this? And he's getting ready for a pretty key interview on the back of it. Ed, where exactly are you?
Surprise, just touched down in Southern California, and we are heading over to Rivian's HQ in Irvine for a conversation with RJ Scaringi, who's the CEO. You're absolutely right. It's been a strange week. I think Rivian's up for a 6th consecutive session, trading at a February high. It's been a real turning point for the company, and they posted quarterly production and delivery figures above Wall Street expectations this Monday. The stock has a lot of momentum, but remember, this is a company that went from the euphoria of the biggest IPO since Facebook's, now known as Meta, to a horrible 2022, where it was the second worst performer on the NASDAQ 100 and then got taken off the NASDAQ 100. So those two key pieces of news are what we're going to be talking about, Karen.
And we've started to see analysts change their tune, haven't we, Ed? We've started to see D.A. Davidson and some of the other analysts really deciding that now might be an opportune time to buy. The headlines are looking more positive. What's the headline you want to create today? What do you really want to understand from RJ?
Yeah, I want to understand why they're not doing more. You know, the factory in Normal, Illinois is capable of building many more than the 50,000 EVs that they've guided investors on for this year. Also just really interested in RJ Scaringi. He's 40 years old. He founded this company in 2011, had the big IPO in 2021. I just want to ask him, is he having fun? You know, being a founder CEO is a rare thing in this day and age. But he is really at the cutting edge of their engineering, running the business. He's brought people in. But the question is, why is Rivian not ahead at this point? They're still kind of lumped in with that large pack of EV startups that are suffering, but Rivian's actually producing at scale.
Well said. Ed Ludlow, battling some of the tannoys over there in the airport. Thank you so much for bringing us what we're really excited about. A live interview a little bit later with Ed Ludlow and, of course, the Rivian CEO, RJ Scaringi. Heard a little bit of what he wants to get out of that particular conversation. We can't wait for it. Meanwhile, that does it for this edition of Bloomberg Technology. Do not forget to check out the podcast. You can find it on the terminal, as well as online on Apple, Spotify, and iHeart. From New York and from Southern California, this is Bloomberg.